So there's a country out there that is going to put on the popular vote up to the people whether to outlaw the country itself going cashless. So in other words, they're going to let people, the average Joe and Jane, actually vote whether their country has the ability to maintain cash on into the future. So in light, of course, of the pushes towards digital currency, digital payments, CBDCs, this one country actually stands in absolute opposite direction from everybody else, because a lot of other nations are just pushing towards cashless societies. So Switzerland looks to be taking a different approach, at least the people are, because a group who actually was canvassing for signatures, they were able to trigger the popular vote. So without this group actually pushing, going out there, getting the signatures, none of this would ever happen. And that's really kind of important, because maybe other countries can learn, other citizens can learn. They don't want to lose their access to cash. That's democracy at work right there. So this report I'm going to reference is from Reuters. There's not many reports out there concerning this topic, which is pretty interesting. Maybe they're choosing to ignore it. I don't know. But what's interesting about this report, this article, frames it in a very negative light, which I find very, very disturbing. So I'll go through it here. So they start by saying Swiss citizens will get their chance to vote to ensure their economy never becomes cashless. Great, right? Then they say that this was triggered by a pressure group, a group pressuring people to do this. But that's how democracy is supposed to work, right? You give people the choice as to how to move forward with their lives. So I find it very bizarre that they're kind of framing the group in a very negative light. So then they talk about the group, the Free Switzerland Movement, FBS. The group says that cash is playing a shrinking role in many economies, of course, with the push for CBDCs. And the group says that it makes it easier for the state to monitor citizens' actions. That's probably why Reuters is putting a negative spin on the group or their stance. I don't know. Anyways, so if the popular vote does go through, if it does pass, they would actually add a clause or an amendment to the Switzerland's currency law, according to Reuters. And essentially, this law would govern the way that the government, central banks deal with actual physical banknotes and coins. And it would stipulate or force the government to basically provide sufficient quantity of banknotes and physical coins that they always must remain in circulation. And then Reuters goes back to putting a negative spin on the whole thing. They say there's no evidence of moves towards a cashless society in Switzerland. Why do they have to be so negative? Anyways, the group gathered more than 100,000 signatures. 100,000 was the required trigger for the popular vote. This group, the Freedom Switzerland Movement, FBS, the president on the guy's website, it says it's clear that getting rid of cash not only touches on issues of transparency, simplicity, and security, but it carries a huge danger for surveillance by the state, he's implying. The group leader also views Switzerland as a European standard bearer for the defense of cash. Pushing through such guarantees in the EU would basically be impossible because there's too many countries, 27 states, right? Reuters ends the article by saying C-19 lockdowns accelerated the increase towards cashless. On top of that, Reuters does say that Europeans and Americans would happily go cashless, and 20% already do. Again, kind of putting a positive spin on the cashless movement, the push towards maybe CBDCs. But why would they put such a positive spin on cashless? Then it gets a little more interesting. The vice chairman of the governing board of the Swiss National Bank, this guy named Martin Schlegel, he gave a speech, actually, on cash. It's called Popular But Under Pressure, Cash in the Digital Age. I will put the link down below. You can check it out, actually. Pretty interesting. And the whole speech is basically in defense of cash. Very interesting. So it seems that Switzerland has more of a closer connection to cash, culturally speaking, than some of their neighboring states where cash usage is very, very low, like Norway, Germany, other places in Europe. And remember, this guy is the vice chairman of the governing board of the Swiss National Bank. It starts out very cordially. It's, ladies and gentlemen, let me start by saying thank you, da-da-da-da-da. In his remarks today for the speech, his focus is cash, legal tender. Talk about payment habits changing in the age of digitalization. But he says, however, cash remains important and popular. And I would like to explain why this is the case and why it is important that cash continues to be widely accepted and easily accessible. And he says, cash is a well-functioning system. It is not to be taken for granted. This is the guy of a Swiss National Bank. That is insane. He says, I will set out why we need to take due care of the infrastructure in order to ensure freedom of choice in payments in going forward into the future. So there's a PDF to the whole speech on the website. You can check it out. But there's three main points he talks about when it comes to cash. First one, he says, cash makes managing your money clear and simple. He says you only have to open your wallet to see if you can afford any kind of expense. He says it's with good reason that parents usually give children their pocket money in cash. When you hold a plastic card up to a payment terminal, all you see is the amount that will be debited from your account. Second, thanks to its simplicity of use, cash allows everyone to participate in the economy, sort of on an even playing field. You don't need an account, you don't need a mobile phone, and you don't need a PhD in computer science to use a crypto wallet. You can pay with your coins or greenbacks. Easy. Third, and I think this is a pretty important one, is when paying by cash, you don't need to provide personal details as your name or card number. With electronic payments, personal information is out there. And of course, this behavior is stored. Pretty interesting for the vice chairperson of Swiss National Bank in defense of cash, his speech. But of course, before everyone gets excited about the vote, I'm pretty sure that if people in the government don't like this popular vote, they will basically water it down. It will be tuned to the likes of whatever they see deemed fit for the citizens. How dare the average Joe and Jane get a say in matters of currency? Okay, well, that's what's going on with Switzerland. But what is happening here in the United States? There's actually a congressman from one of the states. He just put up a bill that would prohibit the Federal Reserve from issuing any type of CBDC. There's a massive catch. Number one, a congressman from Minnesota has basically this much power compared to the Fed Reserve's power, which is enormous. Number two, as nice as it sounds, it's actually just for show. Because in the bill, he says it would just prohibit the Fed Reserve from issuing a CBDC directly to anyone, i.e. an individual. But Fed Reserve doesn't issue any money to any sort of individual as is. So essentially this bill from Tom Emmer, which would prohibit the Fed Reserve from issuing a CBDC directly to anyone, is for show. There's no other way around it. It's just for show. Fed Reserve simply controls the money supply, and that's a lot of power. It certainly is a lot of power. That no way that this congressman is going to basically beat them at their game. There's no way. The Treasury Department prints the money and then it's handed to banks. So the Fed's main purpose of adjusting interest rates and of course the money supply will never directly affect anything to do with this guy's bill. The White House is already running a lot of studies on CBDCs. On top of that, the Fed Reserve in New York is doing pilot programs. Currently doing pilot programs. So the notion that this bill would even remotely affect an issuing of CBDCs by the Fed Reserve, not gonna happen. Here's a copy of the text. The congressman also tweeted a copy of it. It's from Tom Emmer from Minnesota. And I learned about it from Bitcoin Magazine. So the bill is actually titled CBDC Anti-Surveillance State Act. And in it says it details a Federal Reserve Bank may not offer products or services directly to an individual or maintain an account on behalf of an individual or issue a central bank digital currency directly to an individual. And then it goes on to say that the Board of Governors of the Fed Reserve System and the Fed Open Market Committee may not use any central bank digital currency to implement monetary policy. In his tweet, he's explaining that any digital version of the dollar must uphold our American values of privacy, individual sovereignty, and free market competitiveness. All sounds fine and dandy. He also says anything less opens the door to the development of a dangerous surveillance tool, that being the CBDCs. And of course, this aims to kind of nip it at the bud, the creation of a CBDC with the intention of the so-called surveillance system a la China. All noble causes, by the way. There's no reason why anyone should be against the bill, except that it just doesn't make sense. It doesn't hold up. Now, Bitcoin Magazine themselves, they say they basically have a bunch of articles on why CBDCs are fantasy. One is called The Currency Narrative is a Fantasy. CBDCs are a fantasy, a technocratic fallacy. That the idea of a CBDC not only has moral and ideological opposition to it, but technical limitations, present challenges that basically would make it impossible to even implement in the first place. Now, the bill actually has some support behind it. Somebody from Georgia, Barry Loudermilk, what a last name, Barry Loudermilk from Georgia. Another guy, Andy Biggs from Arizona, he said that unelected bureaucrats are driving us to an authoritarian state. How dare the average Joe and Jane get a say in matters of currency? And I suspect the Reuters bosses, that was kind of their take on the whole thing. So pretty interesting developments coming out of Switzerland. Maybe it'll pass, maybe it won't pass. Maybe certain interest groups will prevent it from passing. But nonetheless, it shows that if enough people get together and basically push for certain laws like this, adjustments, where the average Joe and Jane can get a say, hey, maybe could make a difference. All right, guys, that's it for this one. Thanks for watching. Smash a like if you haven't. Please do subscribe, and I'll see you in the next one.
Can anybody out there